Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was another interesting day in the FX markets as the dollar continued to decline against the majors across the board. It's hard to gauge if this rapid decline, which basically began last Thursday, is in anticipation of further FOMC quantitative easing being announced on Thursday, or is it in anticipation of the German High Court ruling in the constitutionality of the ECB mechanisms that are required for the ECB to implement its bond repurchase program, which could help lower Spanish and Italian yields if they do move higher once again. Now, the question going into the future is what will happen if the ECB plan is, if the German High Court rules in favor of the ECB plan. We would probably see the euro move up once again towards the 130.30 area. Would be the initial level of resistance as the pair did move higher above the 128.20 support level, a resistance level, which now will act as support in the near-term future. If for some reason the court ruling is disappointing, we could see the pair easily move back below, and we could see a pushback towards the 126.90 level. It appears in the short term that most people are anticipating a positive result from the German High Court, and then if the court actually does somehow rule against the measures, there probably could be other ways that they could restructure the plan to move around the obstacles at hand. So the euro, that could be the reason for the recent ascent for the euro. It could be just people realizing that it is inevitable that Draghi's plan will be implemented in the short term. Now, the next pair we're going to take a look at is the Great Britain USD. As the Great Britain pound cross broke above the last level of resistance at 160.50 today, and you can see that the pair is up markedly over the last few days, and now it's running up close to strong long-term descending support, which has contained the pair for well over a year around the 161.40 level. Any move up to this level could find major resistance, and we could see a pushback down lower towards the 160.50, towards the 159.60 level. Now, if we have a push higher above this level, tomorrow or after the FOMC, we could easily see a pushback up towards the 163 level. And the last pair I'm interested in is the New Zealand USD, just because the New Zealand USD cross is coming up upon a major resistance zone here between 81.85 and 82.20. This level has capped the pair's movements over the last few months, and a break above this level could easily see the pair push back up, would change the basic direction of the pair, and we could see the pair move back up initially to the 83.15, then the 84.70 level. But if this level holds, even with the data coming out, we could see a push down to 80.30. All right, so tonight will be, Wednesday's trading and your early European trading. It should be interesting to see how everything plays out, and then we have the FOMC on Thursday. So the data is beginning to flow, and we have had quite a bit of liquidity today, so it looks like the markets are back in flow and the summer doldrums are over. Everybody, remember to keep your trades keen and to play it safe, and this is Currency Watch.